Hey everybody, Marty Mazur. Good evening, 11th of February 2016. Quick commentary for you. Chart in front of you, the mountain is oil. The green line is the Dow. As you may know, the Dow was down over 200 points today from start to finish. However, it was down 400 points or so at the low today. Notice how when oil bounced, stocks bounced and pretty much hugged the price of oil all the way till the end of the day, gave up a little more than oil did there towards the end. Janet Yellen finished her congressional testimony today. I think she said all she needed to say yesterday, and in my view, she gave the market all that it could ask for. Apparently it wanted more, if you will. Talk about the market like it's a thing, so I'm doing air quotes. The Fed is not going to say, nobody in the Fed is going to say we're not going to raise interest rates this year at all, which seems to be what stocks or the market or traders want the Fed to imply. That would just be incredible, meaning they would lose credibility if they made that comment. The best they can do is say, we're concerned about the global state of affairs. We see real strength in the U.S. labor market, which I see as well. But we have to remain data dependent. We don't want to exacerbate something that could morph into an economic slowdown at this stage. At the same time, I think they're desperate to get some tools in their tool chest by way of, at a minimum, a higher Fed funds rate, so that if we do end up, experiencing an economic slowdown, at least they have something to work against it with. But I do think they're afraid of getting to that point sometime soon because of just the global turmoil. I've talked a lot about the risk in the banking sector, its relationship to energy, so we'll just skip that tonight and keep it quick and just focus on the charts. Here is, by the way, I have a new program I'm testing out, so if I'm a little jerky with it, you'll know why. So here is my 60-day, 60-minute chart, just to take a peek at the technicals. We held that January 20th support line at 1812 on the S&P. Very, very important from a technical standpoint. It would have been nice if it didn't happen precisely with oil bouncing as well. So we'll, whether or not that has meaning, whether it was more of a technical bounce or just a bounce with oil that just ironically was at that level. But from a technical standpoint, you'd have to say that that was pretty strong support today. And remember, that was at January 20th where the current correction bottomed the first time. Boy, if that's a double bottom and we move up from here, suddenly that looks like it could be support. I've been maintaining that when I look at the technicals in more detail, that and I look at history, it would make sense that because of the way we started this year and all of the stuff that's out there and the way the technicals and some of the momentum looks and other indicators, that we don't bottom till sometime later. But hey, we absolutely could. One thing I'll tell you is that the market is in a very technically oversold position at the moment. Very often when we're at these levels and we found support, then you see a pretty substantial bounce out of that. So it'll be interesting to see if there's any follow through over the next few days. And then maybe we regain this particular trend line and find support here. Ultimately, we will come up and close that gap, that oops pattern that I talked to you about. Ultimately, we will come back and close these, meaning, and that I can say that with a great deal of confidence that will happen. I just can't tell you, how far down the chart that will happen. Again, I'm still thinking, this makes a lot of sense before we get back to that point, but it doesn't have to happen that way. And I think it would be very healthy, fundamentally speaking. I showed you yesterday my valuation charts. I'm really liking how stocks look like right now from a valuation standpoint. But stocks can stay cheap for quite some time, or cheaper, I should say, at this point relative to where we came into the year. So folks, pretty meaningless day, other than just more reaction to oil, maybe some reaction to Janet Yellen's commentary, but technicals, that would be encouraging if somebody's wanting a bottom here. But I'll keep you up to date as things unfold. Look for potentially a short-term bounce. Certainly nothing that we would act on, but it would not surprise me. I'm not saying it's going to happen, but it would not surprise me to see that over the next few days. Have a great one, and I'll talk to you again probably tomorrow. Take care.